ठीक है. If the market increases, so I'm gonna say the formula should be, instead of taking the money out, what you should do is you take 1% out, keep 2% shares, and 103 as a compounding, as a attack money. So keep it increasing attack money. Yeah, sure, I'm fine with it. The reason is because your attack money is targeting 6% rise, right? So you that is sure guarantee. That's a basic assumption, right? So if you're not able to find those shares, then you're in some other kind of a problem, right? I'll see whether we need to become foolproof against that. But for now, if you know, and you need to take so 103%, right? 103% keep your cream. So and yeah. So and keep the 3% in the form of shares. You can take out $1% out also, but you can keep it also there. I would say I would keep it, because now you're well positioned for those shares to go up also, and those are 103. Your attack money is also, your play money is also increasing. So keep increasing your play money, and eventually you can keep growing. If the market keeps on going up, let's say from 80,000 goes to 1 million, 100,000, you are gonna look at money. Now your new number will be 100,000, and now when it goes down by 20%, you follow the same pattern. You increase the 2 crore and all that stuff. Okay, making sense? Remember, when the market reduces by 20%, there will be huge negative news in the market. Something will come, something will fall, World War II will start, this and that. You should not get scared, because you are going with a formula. You are going with a discipline. You are increasing the play money by only 1 crore. So 2 crore is the play money now, right? So, and then from 2 crore, let's say market goes on by 40%, then or 33%, then you're increasing it to 4%, 4 crores. So be careful. Or maybe from 2 to the 20%, 35%, you're going by 4 crores. And then from 35%, when it falls by 50%, then you're going to, let's say, 6 crores or 8 crores. So you're not really just doing that. You're following. If it goes below, you know that you have a lot of money to play with. Right? You remember you did the net cash value analysis. If it goes by 6%, 60%, then you got the windfall. Now you have a lot of play money, right? You have 20 crores of play money. Out of that 7 crores you have already used, and 13 crores is left. First of all, out of those 7 crores, but all the shares will not reduce to 10% or something, right? Let's say they are half, and there is a possibility that you have already used the play money. Let's say you have done 20 trades, so you have already made 6%. Remember, so that will be good. So you won't be in too big of a soup. If it goes down to 60%, then be bold. At that point, be bold. If it goes down to 70%, you have not taken any margin call, so you'll be fine. Just stay there. Keep invested, right? Don't book the losses. Okay, don't book the losses, because you should believe that the shares will rise. These should be all class A shares where the companies cannot rise. You should maintain a variety of portfolio. You should not just be having a very small portfolio. Don't stick to one industry. Have a full plan for how your portfolio should look like when the market is at 40% or 60% down. Okay, so this is what you can, I think of it as a full-fledged strategy to make a lot of money in stock market of India, right? Yeah, I'll tell you why India, why not America. So in India, so there is a basic thing that if it goes down, market will go down, it will go up. If the share will go down, they will go up. But in America, for some reason, some shares keep on going down and become zero, and then the company still says, like for example, General Motors. If Jet Airways has gone down and become zero, then the Jet Airways planes have also stopped. But in General Motors case, this didn't happen. So in America, this is a very interesting anomaly. Sometimes the companies were doing very, very well, but it becomes zero. And that's my belief that Nvidia will become zero. It is September 5th or something, September 8th, so 5th or 6th or something, 2024. I'm telling you, Nvidia will become zero, because that's how it becomes. But let's say Nvidia falls to 20, or let's say it becomes 1 again. Don't you think people will just jump in to buy it? When people jump in, investors will just leave it. Trust me. If Nvidia goes down by 10%, people will not leave their positions. They'll keep holding their positions until people start leaving their positions at, let's say, when it goes down by 50%, when people leave the position, only then the investors have an interest in it. Big investors have interested in it. So big investors will not, and in my opinion, if it goes down 50% or if it goes down to 60%, many people will jump in. Same for Bitcoin. When a market is so high, you never know what's going to happen, right? So my point is, right? But to become immune to these things, make sure you are vested in multiple shares, at least 30-40 shares at the bottommost level, different industries. Okay, remember that part, it should be different. And put the stop gain at 10 times. Acha, when the market has gone by 20% down, then you should put the stop gain of various shares. Remember, you're leaving 6% shares, remember, or 3% shares. You're increasing the compounding effect, and then but then you're leaving the shares 3% shares in the market itself, remember. Acha, if you want to work on a formula, when the market keeps on going up, you can keep taking money out, 1% out. That way, once you take 1 crore out, then you're done. Now you have no investment in the market. Your investment is a play money is coming from your, right? When the markets keep going down, let's say it goes on 20%, you can leave 1% in. When it goes on with 35%, then you can leave more in. Then when it goes on by 50%, you can leave more in. But when it leaves by less, like 60%, that's your target number, right? Then you leave everything in, keep using play money, but then 6%, you know, instead of just keep all 6% in, basically, in the form of the shares. And then you buy another share, another share, another share, and keep playing, right? Stick to Class A shares, guys. Class B shares, you never know. They become zero all of a sudden. Unitech became zero. So many shares become zero. DB Reality became zero. You never know what's going to happen, right? They may eat up all your principal amount, the play amount. Okay, this is the whole strategy. If I may be missing some component, I always think about it. But please, whoever is taking a lot of interest in investments, please do let me know whether